Tata Motors is the top Nifty mover after total global sales surge over 8% in the fourth quarter of FY23. JLR's sales too see an uptick of 19%. Brokerages like Nomura, CLSA and Goldman Sachs all issue a big buy call.
And real estate firms Godrej Properties and Sobha gain on strong quarterly updates. Sobha records its best ever quarterly sales. Godrej Properties surpasses its booking guidance of 10,000 crore rupees in FY23.
Titan too surges after the jewellery segment of the company grew by almost 23% in the fourth quarter. The company says large ticket purchases were led by a mix of high-value studded jewellery and solitaires.
MGL and IGL surge in trade after the government accepts suggestions of the Kirat Parekh panel on gas pricing. APM gas prices will now be announced every month with a floor price of $4 and a ceiling of around $6.50 per MMBTU.
Some more updates coming in for the fourth quarter. Credit access Grameen up nearly 4% on the back of a strong fourth quarter update where disbursals surged by 50% quarter on quarter, whereas the disbursal to AUM ratio is about 45.3%.
Hello and welcome to Chartbusters. I'm Nigel D'Souza and joining me as always is Mangalam Malu. Well, Mangalam, good going for the Nifty. The Nifty Bank is a little bit under the weather, but still the Nifty is holding with some gains of close to around 30 points odd. Well, a good time to get in our technical expert on the show. Shivangi Sada joins us on the show. Hi, Shivangi. Hope you had a good weekend. What's your trade on the index? We're up close to 25-30 points odd, but the Nifty Bank is not participating, which is preventing us from moving higher. Your take?
Good morning, Nigel and Mangalam. Thank you for having me on the show. Happy Easter to all who are celebrating. And we've seen that, Nifty has been, in strength from the last few sessions, and we've seen higher highs, higher lows in the index. And it has moved around 700 points in the last 1 week's, time. And overall, FII's long-short ratio have also improved. They have increased their longs, and this indicates that overall undertone of the market is quite bullish. Now, the volatility index had been cooling down in the entire week in the previous, we've seen. But today's slight increase in the, volatility is causing some sort of a range-bound move in the Nifty. But overall, the undertone is quite positive and recommending to utilize any dips as a buying opportunity. And a hold of 17,442 levels over here would take the index above to 17,777 levels immediately. Now, talking about Bank Nifty, we've seen that this index has been underperforming the broader market from the last 3 sessions, and some of the heavyweight banking stocks are moving quite range bound and not supporting the index. But overall, with the Nifty's view, the Bank Nifty's view is also intact to positive, and we would expect 41,250 levels over here with a support near 41,250 levels over here with the support near 40,750 levels.
All right, take that point on the individual indices, Shivangi. In fact, as you speak, the India VIX has moved closer to the high point of trade. Of course, over the last few trading sessions, it had slipped sub the 12 level, and now, as we speak, is around 12.5 on the India VIX. Individual stocks, what are you looking at? I mean, you are positive on both the Nifty as well as the Nifty Bank with, belief that maybe we will inch higher levels. The mid-cap index and individual stocks, what are your thoughts?
So individual stocks I have on my radar is first is DLF. We've seen that the March series ended with 98% rollover as we head towards the April series, and this stock has been resilient despite the market volatility from the last few months. Now it's come out of its range on weekly frame, and we've seen a breakout over there as well. It has been continuously forming higher lows from the last 5 sessions and holding quite strong with momentum in this entire space, in fact. In this stock, specifically in the series so far, we've seen short covering and longs being built up at these levels as well. So recommending a buy here with a target near 414 and a stop near 385 levels. Now, second pick would be MGL. This stock has been making higher highs from the last 3 months and indicating that gradual shift in the price range has been taking place in the stock. This stock was unable to hold above 1,000 levels from the last 20 sessions, and it is now holding above those levels and, quite resiliently and quite strongly. So recommending a buy here. It's also given a breakout breakout on its weekly frame. So the next levels which we could see here is 1050 levels with a stop near 990.
All right, thanks so much, Shivangi, for stopping by and giving us all of those details. Well, let's focus on Neogen Chemicals then, because sources are telling us here on CNBC TV18 that the company is likely to announce a technology partnership with a global green energy company. Vivek is picking up that scoop. He's joining us to fill us in with more details on that front. Vivek?
Well, good morning. That's right. So what we understand from our sources is that Neogen Chemicals today is most likely going to go ahead and announce a technology partnership with a global major. Now, this particular partnership that the company is likely to announce is going to enable the company to go ahead and take benefit of the various PLI schemes that have been announced by the Indian government. And this is going to help the company supply, one basic key component as far as domestic battery majors are concerned within the EV battery storage space. Along with that, the company is also likely to go ahead and detail steps as far as electrolyte manufacturing that the company is looking to specialize in, and this is for lithium-ion batteries. Now, remember, the company has gone ahead and called, media personnel for a press conference, and it's going to be for a strategic announcement. And what we are picking up from our sources is what we just detailed. Just for some background, remember the company has said even in its previous conference calls that it is looking to enter electrolyte manufacturing, and this is for lithium-ion batteries. And in March 2023, actually went ahead and announced the formation of a subsidiary known as Neogen Ionics. And this is something, that the company said would be looking into the EV space. Now, Neogen Ionics was basically formed to look at opportunities in energy storage, such as lithium-ion batteries mainly. And remember, the company's original business is that it's a bromine-based specialty chemical manufacturer. We reached out to the management, they've asked us to hold on and, wait for the strategic announcement that they will make before confirming the story to us.
All right, seems interesting. The stock is already higher, up close to 4.5%, so we'll have to keep an eye out on that one, Mangalam.
Most definitely, and importantly also know, the financial impact of what this deal would entail, because usually these deals are long drawn in terms of benefits coming by and not immediate, but on the back of this news, the stock high by about 4.5%. But let's get you some ideas for profit coming in from our colleagues at Money Control Pro. Jitendra Gupta joins in.
Hi, thanks. There are a few companies that offer longevity of business and certainty of the cash flow. The government on Hindustan Aeronautics monopoly in the defense aerospace is one of them. Its manufacturing capabilities, technical know-how, tie-ups with global players, strong entry barrier, of course, a large pool of opportunity makes this company a unique play. It's a stock has corrected recently. It is trading 19 times its fiscal 24 estimated earnings, which is quite reasonable in the light of opportunities in the sector and quality of the business. It is sitting on an order book of close to 84,000 crore, which is close to 4 times its annual revenue. Moreover, the pipeline of new projects or new orders is quite strong. The aggregate value of the orders to be awarded over the next 3 years is estimated to be in the range of about 1.1 to 1.2 lakh crore. Further, it is the company is developing Asia's largest helicopter facility, which will manufacture 30 helicopters initially and later on 60 helicopters post the second phase of expansion. This will obviously expand capacities considerably. Overall, it's a business which enjoys strong economic moat, and that along with robust order book, opportunities in the defense, capacity expansion, and of course reasonable valuation makes Hindustan Aeronautics a perfect blend for the long-term investors.
All right, that is an idea for profit coming in from our colleagues. Just keep an eye on a couple of these mid-caps. The mid-cap index has actually been doing well over the last few trading sessions, and beneath the surface, the small caps doing extremely well as well. Parag Milk, for instance, up almost 13%. Not a stock that we usually speak about. It's still off about 30% from its highs. Higher milk prices maybe helping that counter. Alongside that, a big move come by on Borosil as well. In the next few months, we'll probably get any update on the demerger of both their companies. And Aarti Surfactants, that's the other one, which is up 10% as we speak. Take a short break, come back, get you more on the markets as well as individual stocks. Welcome back. Even as the Nifty Bank is underperforming, a couple of stocks which are supporting the Nifty this morning. One of them is L&T. L&T has moved to the high point of trade. That's doing well. The other one is HDFC Limited. That's recovered from the lows. So that's another stock which is aiding the Nifty. Of course, not a part of the Nifty Bank. And ONGC too is up about 3% as we speak. Of course, all of this over and above the other big movers on the Nifty, which do not have as much weight as the stocks that we're just talking about. HDFC too has recovered from the lows. But the stocks which are buzzing around today are gas price sensitives. We have IGL and MGL. Of course, we had seen a big move in these counters over the last couple of trading sessions, but today it's followed up by another small green move. Sonal joins in with the details. Sonal.
Thank you so much for that. Well, yes, a big update that has happened in the gas sector. The new gas price regime has kicked in because the government has accepted Kirit Parikh recommendations for gas pricing now. So earlier it was formula based and we had the pricing at $8.57 per MMBTU. But now these gas prices will be fixed every month versus the 6-month period that it was fixed on earlier. It will be pegged at 10% of the Indian crude basket, basically the average of the crude prices in last 1 month. And also it has a floor now of $4 per MMBTU and cap at $6.50 per MMBTU, thereby reducing gas prices for gas consumers. Now, key to note is that ceiling of $6.50 will be maintained for FY24 and FY25, post which there will be a hike of $0.25 per MMBTU every year. Additionally, the gas from non-nomination blocks of oil and ONGC will have 20% premium pricing to the APM price, and there is no change in pricing formula for difficult fields like KG Basin. Now, what is the impact because of this? Now, remember, the city gas distribution companies like IGL, MGL and Gujarat Gas have exposure to the gas that they use here. 87% for MGL, 80% for IGL. Gujarat Gas has a smaller percentage here at 36%. On the back of all these cuts that we have seen in gas prices, all these companies have reduced prices. MGL has reduced CNG prices by 8 rupees, PNG prices by 5 rupees. We have seen something similar in IGL. Gujarat Gas has also reduced CNG prices by 6.25 rupees per kg. On the back of this news, Jefferies has increased EBITDA estimates across all these three stocks for IGL by around 20%, MGL by 19% and Gujarat Gas by 6%. For ONGC in Oil India, it's a short-term negative cost, but in the longer term, the floor provides support. IIFL says in the near term, 24% realizations will be hit because of this gas price cut. But for GAIL, it will be a benefit because it will reduce costs in the LPG segment. That's why they see a 3% upside to the FY24 profitability for GAIL India.
Okay, all right. Thanks a lot for that, Sonal. Well, let's also hear out what Mr. Kirit Parikh himself had to tell us earlier today on the channel.
The APM prices recommendations that we had made were following that it should be fixed within a floor and a ceiling price. And that is accepted by the government. The same floor and ceiling we had suggested, $4 per million BTU and $6.5 per million BTU. I think the consumers will are getting cheaper price for the PNG and CNG supplies. Second measure the government has taken is that it has provided 20% additional money or price increase for gas that is produced by ONGC and OIL.
Right, from gas, let's move on to some jewelry updates that have come in. Over the weekend, we got Titan's update. And before that, just, on Thursday morning, we got the update coming in from Kalyan as well. Kalyan is an underperformer today. In fact, did not do too much on Thursday's trading session as well, while Titan is holding up. Why is that? Just looking at the numbers, Titan, of course, has a much higher base. And on that, it's grown at around 25% on its overall revenue front, whereas Kalyan has grown about 17%. This is the overall revenues of the company. Titan, of course, includes the non-jewelry part as well. These numbers have come on a low base, and in that itself, Kalyan's base was lower than Titan. In fact, same time last year, Kalyan's revenue degrew by 6.5%, whereas Titan's grew by just about 1.3%. This is the jewelry business that we're talking about. In the jewelry business for India, Titan's business has grown by 23% on a base of 1.3%, whereas Kalyan has grown at 16% on a base of minus 6.5%. Store addition on a higher base, of course, is much higher for Titan as well. 31 stores is what they've added as against Kalyan, which is 11 stores. And the total stores for Titan now, this is Tanishq that I'm speaking about, stands at 541, versus Kalyan at 147. Both the companies saw better studded ratios, so margins are important to watch out for. Kalyan saw higher growth in the non-south areas because that's where the company is expanding its stores, and that's the area where the company is looking to expand their revenue as well. Over the last 1 year or so, Titan has been an underperformer, up just about 3%, and this compares with Kalyan, which is up by 58%. The most important thing to watch out for these companies is the impact on demand in the first quarter on account of high prices, because both Titan and Kalyan have said that demand in March was a little subdued because of higher coal prices. With all its outperformance, Kalyan still trades at a steep discount to Titan, but that's what one pays for Titan premium over a long period of growth. Titan at 57 times. It was available at 57 times, 60 times same time last year, and now it's become 57 times, mainly because of the time correction that we've seen in the stock.
All right, Mangalam, thanks a lot for that. For the time being, though, we'll slip into a short break. You come back, we'll continue our focus on markets and stock-specific action. Don't go anywhere. Welcome back. Let's turn our attention to the auto space then. Goldman Sachs has issued a note on Maruti Suzuki. Sonia joins us to tell us more about that. The stock is a little bit lower today. Sonia?
Well, thanks a lot for that. As you rightly pointed out, the stock is lower because Goldman Sachs has come out with a downgrade on Maruti and has cut the target price quite a bit. Earlier, their target price was 11,000. Now they've cut it to 8,800. It's still higher than the current market price, but they say that there is persistent weakness in the small car segment in which Maruti has a large presence. 35% of Maruti's volumes currently come from the small car segment, which is your Celerio, Wagonar, Alto, Ignis, Espresso, etc. And there the weakness continues. Also, if you remember a couple of days ago, the management commentary on our channel was also quite weak. They said that the industry will barely grow 5 to 7% in FY24, and that seems to be the concern that Goldman Sachs has as well. They say that there is a potential impact on FY24 production because of the, the supply constraints, the semiconductor supply constraints that the industry is facing. Apart from that, in the small car segment, the inventory level is quite high, indicating that demand continues to be under pressure there. The inventory level in the small car segment is currently 2 times that of what is the normal rate of inventory in that space. Also, Maruti is looking to, stop some of its models. So they're looking to replace the Alto 800 with the more expensive Alto K10. The Urban Cruiser and the S-Cross have been discontinued. So all of this will definitely have an impact on the business. These 3 models collectively have a 3% impact on the FY24 volumes. Hence, they have gone ahead and cut their EPS estimates by 15% for Maruti. They also speak about how a stronger yen in FY24 could represent some currency headwinds on the margin. So big downgrade coming in from Goldman Sachs, hence the impact on the stock.
All right, that explains why Maruti is down about 1.1% in today's trading session, a big downgrade coming in. Thank you, Sonia, for that. With that, we kickstart the earnings season. Fourth quarter earnings season is here upon us, and with the big IT majors kickstarting it this week, with TCS reporting numbers on the 12th, Infosys on the 13th as well. Rima joins in with the key expectations from the sector this time around. Rima.
Thanks so much for that. So this is going to be one of the trickiest quarters to lay out expectations, considering that we are in a heightened period of uncertainty. Just look at the broad divergence in expectations. So for instance, for TCS, the range of the constant currency quarter-on-quarter revenue growth ranges from 0.1 to 1.7%. For Infosys, it goes from minus 0.1 to 1.1%. But look at the numbers for HCL Tech. Now, CLSA is expecting a degrowth of 2.9%, but Nomura is expecting a growth of 1.1%. So the expectations are all over the place. But as you can broadly see, the growth this quarter is going to be lower than the prior quarter. Q4 less than Q3. And the key reason for that is the banking crisis in the US regional banks and the European banks may have induced a greater caution, impacting the overall tech spends by banking clients. And plus, typically, March is a seasonally weak quarter. Now, the margin performance amongst large cap is also likely to be more divergent. Now, for TCS, we're anticipating about a 50 basis points margin expansion, but for HCL Tech, margins could come down on a quarter-on-quarter basis. The key is going to be the FY24 guidance. And here we're anticipating Infi to be conservative and guide for a 6 to 8% revenue growth, constant currency revenue growth. But this will be lower than the 16% odd that they clocked in last year. That's FY23. But Infi is Infi, so we're expecting them to be fairly conservative. For HCL Tech again, it's very hard to get a consensus this time on guidance, but it looks like it could be a mid to high single digit kind of growth because you've got a minimum of 4 to 6% and you've got some analysts even going up to about a 10% growth. But both HCL Tech and Infosys are likely to range the upper end of their margin guidance. These are the numbers. For Infosys, 21 to 23% versus this year's margins at 21 to 22%. So the upper end of the margin guidance is likely to be raised. Now let's quickly run you through some of the brief and quick expectations of what we are going to be watching out for. One, the extent of impact due to the global banking turmoil on deal wins. Two, retail, high-tech, Europe. These were flagged off as some of the weak pockets in the prior quarters. Does the weakness continue this time? Will normalcy return in the second half of FY24? Because what analysts are penciling in is that H1 is going to be weak, but things pick up in the second half of the year. Company-specific TCS is eligible to announce a buyback. It's eligible, but will it do so? Leadership changes have been announced right at the top for TCS and Tech Mahindra, so they will take center stage. And any change in priorities, strategic directions, new appointments as well, right under them. Now, TCS has to announce a new BFSI head. The COO, Chief Operating Officer, will be resigning or retiring next year. And finally, on deal wins, are we seeing a delay in deal ramp-ups? Are sales cycles getting longer? Is there slower revenue conversion? So all these are some factors that we will be watching out for. And finally, considering that the IT stocks have seen a bit of a correction, the valuations now are pretty much what they were compared to their 5-year average. So are they pricing in the uncertainty, the uncertain environment that we're currently living in? Back to you.
Thanks a lot for that, Rima. We'll wait back to see how they perform, those IT companies. We'll get the results coming in the next couple of days. Well, insurers, they're in focus as well after data for the month of March was released. Yash is with us to break it down for us and analyze the data for us. Morning, Yash.
Morning, Nigel. So before I speak about the listed companies, just a view on the industry data. The total industry data has grown at a healthy pace. The general insurance industry in the month of March has grown its premium by about 11.5% on a year-on-year basis. FY23 growth has been stronger at about 16%. Standalone health insurance companies, they've increased their premium in the month of March by 21%. In FY23, the number stands at 26%. Now, to speak about the listed companies, the company which was performing strong over the year has sort of slowed down its pace. ICICI Lombard, the March premium grew just by about 7%, though for the year it's up 17% on a year-on-year basis. And for the year, it's gained market share of about 4 basis points. For New India Assurance, the March premium has been strong after a long time, growing at 11%. FY23 premium up about 6%. And as far as market share is concerned, a big disappointment there for New India Assurance. It's lost market share by about 133 basis points. Finally, Star Health Insurance March premium grew by about 11%. FY23 up by 13%. Market share is down about 15 basis points.
All right, Yash, thanks a lot for that. So that talks about all the insurance companies. Meanwhile, we have got an update coming in from Ajmera Realty as well, up almost 4% for that stock. It's been doing well since morning on account of good updates coming in from other players and an update expected from these guys as well. A 16% jump is what we've seen in their fourth quarter sales value year on year and almost 10% quarter on quarter. With that, we wrap up on this edition of Chartbusters. You stay tuned to CNBC-TV18. Trading Hour comes up next.